Welcome back. You're still tuned into Trading Hour. For the market, like we were telling you, it's a full 100-point gain that we are seeing above that 18,400 mark. A lot of the IT names have also continued to pick up since the start of the session. So Tech Mahindra is seeing a near 2% gain. You have something like an Infosys, Wipro, all at the high point of the day as well. So let's invite our guest on the show now. We have Rohit Srivastava joining us from Indiacharts.com to discuss the way forward. Rohit, thanks a lot for joining us today. This is Pavitra. So full 100-point gain right now. We're above that 18,400 mark as well. Do you think this steady move higher is likely to continue? And, what would you see as the next target for the Nifty and the next support as well?
Yes, definitely, Pavitra. I think the move that started from the low in March, and I've been repeating this, March is a seasonal bottom for markets. Remember March 2020, and so now it's March 2023. And it was also 18 months from the time the market peaked in October of 2021. So both in terms of time and seasonality, I think it was a very good place for the market to start up. The big question is this a sustainable rally? My answer is it is. I think there's too much negativity, which is what is driving it higher. But even if we ignore whatever is happening around the world and simply look at our market, I think that's what it is coming down to. I scanned, dozens of stocks in the last 2 days and looked at their charts. They're all looking very, very constructive, which is, many of them breaking out to new all-time highs, breaking 7-year, 8-year ranges, coming out of what was a 1-year, 2-year consolidation zone, and so on and so forth, which means that the strength in stocks is so much that it has no signs of a market that wants to fall. So it goes to the adage, is this a stock market or is it a market of stocks? So if you look at stocks, you should be very, very optimistic. Now, having said that, what is the next level we look for Nifty? I think supports are around 18,200, 300 now. If we simply draw a trend line from the bottom of March to the low that we made in early April, that is where it is. So that's the trailing support. On the upside, I think we should get past the all-time highs. That is what we are going to try and do. And then we look at a target of around 19,500 next. On the Bank Nifty, we are very close to the all-time high. 44,150 was the last high that it had made, which is barely, it's less than even 0.5% now away. So a small push and you'll have an all-time high reading in the Bank Nifty. So that, in my sense, medium term probably heads towards a 49,000 in the months to come. And the immediate support should be somewhere around 43,000. So that's I think the broad picture. Which simply means that this move continues for several more weeks to come. With, of course, intermittent corrections we cannot rule out, but I don't think there's going to be any meaningful reversal to the market.
So any timeline for the Nifty to hit 19,500 and the Nifty Bank to hit 49,000? Because typically when we get to that all-time high levels, there is so much resistance and markets usually tend to take a step back. It's like, how in cricket when you get to 95, 96, you see so many batsmen getting out and, they spend a lot of time before hitting that century. So, what's the timeline looking like?
I think I will give it 2 to 3 months to get there. It can happen sooner. So I'm probably giving a wide time horizon. If you simply look at this from 16,800 to 18,300, 1,500 points odd, you would have done in a matter of 1.5 months. And so if you add a similar amount of time, another 2 months easily, we could be at those levels if we maintain this momentum. So I think that looks, possible as we get past a lot of the, negative things that you're going to see, things like, what is happening in the US on the debt ceiling and so on. All those events will be behind us. One by one, we are getting past each event, whether it's the inflation fear and so on. And like I said, our own market is, taking a cue from that to, move ahead because there are a lot of positive things happening, at probably stock specific levels. So, that's the timeline.
Okay. Rahul, good afternoon. This is a roaring market. So I just want to get your thoughts in on a couple of themes. You spoke about how there are, Rohit, you spoke about how there are, so many themes that are coming out of a long lull period, and autos is one of them. So your thoughts on names like, say, Tata Motors, which is after so long breaking out of its range. It's already up 40% this year. Do you reckon there could be more upsides?
So in fact, autos has been one of the sectors that has actually outperformed even in the dull period. So if you notice last year when the market fell from 18,200 to 15,200, which is a big fall, The auto index was actually going up because of stocks like M&M, Maruti doing well. Tata Motors, which you mentioned, was probably the laggard among that because it is more affected by the global setups and having its exposure more in Europe. But that seems to be now behind. It's picked up in momentum. It's broken past the falling trend line from the 2020 high. So it's done all of that. So if we look at the weekly and monthly momentum setups, they're pretty good. The weekly is pretty clear on the buy side. The monthly will, of course, give that signal with a slight lag, but breaking past that trend line, which I spoke of, is sort of a signal that we are already there. So I think Tata Motors is just joining the other auto stocks on the way up. That is how I look at it. M&M, Maruti were anyway outperforming last year, so they were already doing that.
Okay, got that. Rohit, you said several times that if you are looking for stocks in this market, it's a great time. It's a very stock-specific market. You want to share some of those ideas with us? I know generally you've liked the defense space, the capital goods space, but any specific ideas you'd like to share?
Okay, so I have to give a disclaimer. We don't give investment advice. So my views are opinions or stocks we like, or I may even own personally. So if you take defense space, there are a couple of clear winners there. You have a Garden Reach, for example, and then the more popular one is Hindustan Aeronautics, which recently got included in the MSCI. Both of them trending well. Now, when we say trending well, what I mean is that, these stocks have been holding on to their 40-week moving averages for almost 2 to 3 years. So they simply don't break below that, no matter what happens to the market. So that shows very strong internal strength. So those are the type of ideas you would like to go with, where the strength is there. And then there are, of course, some cases are where you have deep retracements. For example, one of the performers of last year was an IEX, so Indian Energy Exchange has retraced, say, 61% of the entire rise that it had done in 2020 and 21. And now that it has pulled back 61% and is bouncing off that support level, it's a sign that probably the worst is over when you have taken support at a key retracement. So those are the two different, angles with which we can look at different ideas.
Any stock sectors charts which appear weak and may pose as big drags for our markets?
So I think this is going to be a very, very broad-based bull run. Almost everything will appear to participate. The real hard work is going to be in getting on top of the best performers, which is sort of why I mentioned that, we would like to chase momentum to some degree. Stocks that have held above their, say, 40-week for, 2 years, 3 years, or those that are not fallen or retraced. So one is you try to pick something which has fallen a lot. For example, Lupin. Now that's in the pharma space. It's gone back to the lows that it made 1 year ago and is picking up a bit now. So do you want to go and pick something which is all the way down, or do you want to chase, what is actually doing well? So chasing what is doing well sometimes does give you better returns, and that could be one of the approaches. So for example, I would probably think that pharma and FMCG do well, but they will probably do much less well than rest of the market. So defensive stocks, which probably did well between 2010 and 2020, those will tend to give you lesser returns than some of the other sectors that are breaking out of multi-year ranges, which is where your capital goods and PSUs and even metals come in. Metals, of course, lagging as of now, but many of these sectors of power have broken out of 7-8 year trading ranges. So power index was doing nothing between 2010 and 2020, but now it is broken out. So that is more attractive to me in terms of where the revaluation of those stocks happens, and people start recognizing new growth cycles in those sectors versus the ones that actually did well in the last decade. But that doesn't mean that they may go down, because in a broad bull run, everything moves up. It's just that the performance shifts in favor of other sectors.
Okay, all right, Rohit, thanks a lot for joining in. The market is definitely in breakout mode, and just watch out for the Bank Nifty. 44,152 is the all-time high, so we're virtually at that level. I mean, 100 points away from fresh high on the Bank Nifty, and of course on the Nifty as well, not too far away, just about 400 odd points. Let's slip into a quick break. On the other side, we'll get you more market commentary. Stay with us.